On.
Last. Okay.
We're good?
Yeah. Good afternoon. Thank you for tuning in to September 2024 Director's Cut. We have Department of Mineral Resource Assistant Director, Mark Bohrer.
Good afternoon. As Bridget said, I'm Mark Bohrer, the Assistant Director at the Oil and Gas Division. Present the September 2024 Director's Cut, focusing on the July 2024 production numbers. Before we get into the numbers, I would just like to give an update on our new director, Nathan Anderson. His first day in the office was last Monday on September 16th. He spent one day in Bismarck, and then he and I and some others went out to the field offices to meet our staff out there. And then we attended the North Dakota Petroleum Council annual meeting in Walker City. He's not here today. He's still spending time between the Bismarck office and his home in Colorado, getting his family ready to move up here. So hopefully he'll be here soon, and he'll be the one giving the director's cut. July production, we're at 1.167, almost 1.168 million barrels a day. That's down about 1.5%, but it is about 6% above our revenue forecast. 90% of the productions in the Bakken and Three Forks formations, 3% from legacy pools. The July completions are up, as we'll talk about later. So it appears to have slowed the decline a little bit. I hope to see that turn around and stabilize. And also in July, we had a higher number of inactive wells that likely contributed to some of that production decrease. Oil price, July North Dakota Light Sweet, $73.12 a barrel. WTI was $81.80 a barrel. That's about 5% above the revenue forecast, so that's good. But today, numbers are down a little bit. North Dakota Light Sweet is around $66.50 a barrel, and West Texas Intermediate's about $70.95 a barrel. So that's a little bit actually below our revenue forecast. But those numbers can fluctuate pretty easily. Gas capture, we had good news there. We remained at 94% capture at roughly 3.25 million cubic feet of gas per day. That's down about 9%, but we had Liberty Midstream was down quite a bit, about 50% down due to maintenance in the second half of June and into July, so that likely contributed to those numbers. Wells permitted. August, we hit that 100 mark. That's the number we want to, that's kind of our goal. Is that number we feel we can grow production 1 to 2% with the activity out there. Rig count is steady, up a little bit actually. That's good to see, even with the consolidations we've been seeing out in the field. Waiting and completion numbers, they were identical. I checked the math twice to see if that was right, at 372. Inactive wells, as I said, in July, we were up a little bit at 1771. And in August, we had 97 completions. Again, those are the numbers we want to be at to stabilize and grow our production. July, we had 19,035 wells producing. That's very steady from the June numbers. And 89% are Bakken and Three Forks wells. Initial grant numbers, we did some more reclamations. Those reclamations are ongoing. We completed 9 more in July. On the Fort Berthold Indian Reservation, their overall production is right at 190,000 barrels a day. That's down about 3%, but last month they were up about 2% when the rest of the state was down. So that seems like it's just averaging out. There's 1 drilling rig active on the reservation, and there's 115 approved drilling permits. Drilling rig count remains low due to mergers, and there's more mergers that are taking place now. We have 20 frac crews active in the state. That's a good number. We like to see that. There's a little bit of seismic activity going on. We have 2 active seismic projects. The statewide gas flared volume from June to July increased 11.4 million cubic feet a day to 211 million cubic feet per day, while the state gas-wide and Bakken pool gas capture percentage remained at 94%. So we have good gas capture numbers. Going from 94 to 97, that's those last few percentages are more difficult to achieve. And then there's just a listing of the fields that we kind of keep track on where there have been historically been gas capture issues, and those are pretty steady. There's some that are down, some that are up, but overall it's pretty much the same. And with that, I'd take any questions.
So my question is, there's still, an effort to get more production, maybe get to the 1.5 million that's been talked about. Still, is that still possible this year?
1.5 million this year?
Yeah.
I don't think so. That's probably a little too aggressive to increase production that much in that short a period of time, but we do expect to hopefully get it back up over that 1.2 million barrels a day.
Are there any weather-related things that caused outages at this point?
Not that I'm aware of. The weather's been pretty calm and steady.
But you did mention there was a main stream that was out.
Yeah, Liberty. Yep. You want me to answer this one?
Yeah, yes.
Okay.
Thank you.
So we did receive a question, an emailed question, and the question is, what do I think of the parcels being made available at the BLM Montana Dakota's lease sale in October? Word was that they were likely to be attractive. Do you foresee a more robust sale than the last couple of federal sales? So I'll answer the last question first. Yes, we do think it will be more robust. And there were a few parcels that were attractive. However, they were very small. They're not going to impact drilling or permitting activity in any meaningful way. And a significant amount of the parcels are in areas the BLM themselves have called low priority, so we don't think they'll attract much attention. And again, while we're happy to see a few attractive parcels up for sale, it's not going to affect drilling or activity production in any serious way because of they're so small.
Thank you.
Just to clarify, what's the date of that sale?
It's in October. I don't know the specific date.
How quickly do you think like these consolidations will start to see impacts, positive and negative?
So, there's several mergers that are ongoing. They take a long time, sometimes take a long time to get through. I believe it's the Federal Trade Commission is looking at a couple of them pretty seriously. So that's going to slow things down. And so that creates a little bit of uncertainty in their activity and their schedules. This is typically the time of year companies are going into their budget planning sessions for next year. So it typically we see things slow down when these mergers happen. If they had 4 drilling rigs total, they might drop 1 drilling rig between the 2 companies, and we usually see a drop of a drilling rig or 2 when these large companies merge.
And then in terms of like positives, like in terms of like investing more into infrastructure and stuff, how is that like years of work basically to sort of get those benefits or that they talk about sometimes?
It takes time, but one thing that, as you mentioned, when you have large companies acquire these smaller companies, they do have capital to spend. So we do expect some positive benefits from it, but it can take a little while to trickle down after the merger is approved and they consolidate their employees and figure out who's staying and who's going and things like that. That it?
Yeah. That's all.
Okay.
Thank you.
Thank you.
Ready?
Yes, and we now have Director of Pipeline Authority, Justin Kringstad.
Good afternoon, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. We'll get right into just a quick production update from some of our neighboring states in the Williston Basin area. Still relatively strong production over in eastern Montana, staying above that 70,000 barrels per day. I checked this morning, still had one active drilling rig over there, so there's still limited activity. So I'm anticipating those numbers to stay relatively consistent, and then zero drilling activity for our neighbors to the south, and continuing to see some just slow downward trends on those South Dakota barrels. When we look on slide 3 at those month-to-month changes, again, June to July, not anything major or unexpected that occurred in the numbers. The one thing we will call out down at the bottom, that gas oil ratio set another record level. So June was a record, July another record. Again, we're going to have ebbs and flows up and down on that trend upwards, but the trend continues as expected. So I think Mark was certainly spot on talking about some of the things, looking forward to those August. Even September's been a relatively strong month from what I'm hearing from folks out in the field. So a lot of optimism here as we go forward that we're going to turn a corner this latter half of the year and start seeing, again, more completions, more production associated with that. When we take a look at some of the oil dynamics, this pie chart, again, looks a little odd because we're missing a large piece there, and that's the refined piece. So if you recall, in June, the Marathon Petroleum Refinery in Mandan, North Dakota, had gone down for their maintenance, their big turnaround event that happens every 7 years. And then again, out for almost the entire month of July as well. So we had no throughput going through that refinery. So we were limited then to just our traditional pipe and rail options out of the Williston Basin. So those trends, again, they're going to look a little odd for those June, July numbers with that big jump up. Most of those barrels that were going to the pipeline, to the refinery appear to be being absorbed in that pipeline network. The Brent WTI spread, that blue dotted line here, still sub $5. So that's, in my mind, just one of those thresholds where you start seeing barrels that have that elective option to hop on rail, particularly when we see that widening Brent WTI spread, if they can get some more attractive pricing on those coastal markets that are tied to those world markets. What prices we're doing, PAD 1, PAD 5, Northeast, Pacific Northwest, and those West Coast refineries, again, some of the highest price markets in that June, which is the latest data we have, and then followed up by the Gulf Coast and the Midwest staying, again, relatively strong relative to those PAD 3 Gulf Coast refining centers. On slide 7, with that down tick in oil production, as well as some of the netback considerations, we did see, again, a little bit of a slide down in what was estimated to be leaving North Dakota by rail, so a little less than 2 trains per day, but again, relatively within the band of consistency now for the last 18 to 24 months. Those barrels, no major changes on where they're going to on that rail network, the Pacific Northwest primarily, and occasionally we'll still see some barrels heading to those California refineries as well, and then followed up by the PAD 1 or the East Coast area, still absorbing, give or take, a fifth to a quarter of those barrels leaving North Dakota. When we look at pricing as of today, some positive news. We're continuing to see Clearbrook pricing in the positive, which is bodes well for North Dakota. That is our closest kind of transparent pricing point that we always look to as one of the key indicators of what we could be, seeing reflected back at the wellhead in North Dakota. That Brent WTI spread, again, still sub $4. So I'm not anticipating any major shift in the coming months, at least for now, on barrels, again, electively moving between either pipeline options or rail options. And then you can see down at the Gulf Coast, continue to see those positive light sweet barrel pricing relative to WTI and LLS. this again, this is one of those data points that folks look at, and there's not a lot of transparency about exactly what's happening from marketing decisions through here. So I'll leave this. If there are questions that come up, we can certainly reference back to it. On the gas capture side, June to July, identical overall percentages, identical kind of breakdown percentages as well. 1% of the gas being flared from those wells that do not have connections or had zero sales, and then that remaining 5% of flaring coming from those wells that were connected. It's just infrastructure couldn't handle all the gas heading its direction. And so that's been, we've been in this 5 to 6% flaring rate now for quite some time, which is phenomenal. That's exceeding DMR's regulations. And we're continuing to see a very strong emphasis by companies to stay on top of this challenge. And so a lot of optimism for projects and what those could look like to keep solving this. Again, a lot of these challenges that we're facing require kind of long lead solutions, whether that's power generation, other industrial opportunities for manufacturing or data centers. You've likely heard a lot of these topics discussed, but those are typically long lead. So we're going to continue potentially some choppiness here as we go through the next several years, continuing to see production growth, most likely. And then again, that challenge of making sure that all those molecules have places to go. On slide 13, where it all starts, making sure that those new wells producing gas are getting connected as quickly as possible. It's good to see those hand in hand. Again, this is something we watch. If we start seeing a disconnect and we start seeing many more new wells producing gas relative to how many were getting connected, that's when things start to get concerning, and either plants or gathering, compression, something is restricting, or weather. So this is one of those things that we keep an eye on relatively closely. EIA expecting at least a little bit of near-term weakness in their oil price outlook before coming back and steadying out around that $80. This is again something they update monthly and provide some context on their supply-demand outlook at the global level. When we look at the next day after the well connections is the gas processing piece of it. Again, we're still in a very, very strong position. We see that reflected in the overall capture numbers. And this is something that those discussions and that behind the scenes work of making sure that, that the next sets of gas processing solutions are in the queue and being worked on. And again, those are things that, again, I stay very encouraged knowing that the right players are working on the right types of projects in order to keep pace with this growing outlook. And then on the residue side, the larger interstate transmission dynamics, as we look continuing after kind of that rough summertime, starting to see some more of those market share on the Northern Border pipeline system moving towards the North Dakota gas and seeing less of those Canadian molecules on that system. No major changes on the BTU considerations, what's happening in the basin as far as ethane capture rejection dynamics in the basin. So nothing new to report there. I will quickly mention on slide 20, we're in a mode right now where there's some maintenance going on the Northern Border system at Zeeland, North Dakota, at compressor station 8. Originally planned to take about just over 200 million cubic feet of gas per day out of their capacity for that system, which again then trickles back to North Dakota. It looks like it's a little bit more than that from what I'm hearing. So right around 230 million cubic feet per day. And so that gets broken down between both the Canadian shippers as well as the North Dakota dynamics. And so you continue, and it just amplifies some of that congestion and competition for space on that system. So the best estimate I was able to come up with, trying to back into some numbers and looking at historically what's happened during these maintenance events, it's potential that, during this September 19th to, again, hoping that it is finished on schedule here later this week, potentially around 25,000 barrels per day of overall impact in North Dakota. And why that is impacting oil production is that resistance from the operators to take the opposite route, which would just be flaring that gas versus capturing and putting it in the pipeline system. So likely seeing producers then hold back, curtail some production until that system can come back up to full capacity. And then last but not least, just a quick update again on what's happening at the Wahpeton expansion project by WBI Energy. You can see that table at the bottom right-hand side. A number of the tasks, you can see the grading, stringing, bending are fully complete, and looks like from the most part, wrapping up a lot of those last line pipe construction pieces, the welding, coating. Looks like almost all of the bores. You can see one of the boring operations in that upper right image there, going under any sensitive areas, waterways. That's almost wrapped up as well. So still on target for kind of a November in-service timeframe for that project, which is again a massive win for those communities and the industries down in the southeast corner of the state. So with that, I think that's all I've got for prepared remarks, but I'd be glad to answer any questions.
Can't think of anything. Yeah, okay. Mine must be still on vacation.
Yeah.
Is there a gas oil ratio sort of percentage that, or not percentage, but is there a ratio that producers are sort of saying is like a point where it's going to be harder to sort of keep up with this 95% number, or?
Yeah, so good questions for those online. So there's a question about the GOR and how that dynamic ties back to some of the overall constraints and challenges. And so what's unique about the gas oil ratio, what I've put up on this monthly report is just the statewide aggregate. Every single one of our 19,000 active wells, each has its own gas oil ratio dynamics. And so the challenge becomes for new wells, they've got their own GOR dynamics and issues to deal with. And you have aging wells where those gas oil ratios are starting to reach some relatively high numbers. And all of those. So at any phase of that well's life and regionally in aggregate at the statewide level, it's a dynamic that, again, everyone knew for quite some time that this was a dynamic to expect, but it has continued to, I would say, it continues to keep everybody on their toes for sure, and making sure that this infrastructure is keeping pace.
So do you have any updates on gas storage?
Gas storage. So the question was, any updates on gas storage? There's still active work going on to look at whether or not gas storage expansions in the region will be a key expansion opportunity. I'll say that. So yes, the right parties are looking at projects and what those could look like in assistance to some of the demand outlooks, as well as some of the seasonality and reliability and redundancy components to the basin. Any other questions? No. Okay. Well, thank you, everyone.